Hey, welcome to Everything Money. We're so happy you stopped by. Today we're talking about some very exciting news for our Tesla bears, which, Paul, that's pretty much what you are, right? We've been sort of anti-Tesla, the stock, for many years on the show, but we're very pro-Tesla in terms of the company, their vision, what they're doing. I drive one. Mo just bought one just yesterday. And so we love the cars, not so much in love with the overpriced stock, but more importantly, we are in love with Michael Burry, this kind of strange guy. He's very mysterious, Paul. When he'll tweet some things and then he takes his stuff down. People have to
He takes it down? He takes it down?
There are Twitter pages devoted to screen capturing what he says before he takes it down. But he's a strange guy. If you've watched the movie The Big Short, Paul turned this movie on to me. I've watched it probably 100 times, Paul.
There's no way you've watched it 100 times.
I edit wedding photos for 3, 4, 5 hours at a time, and I just auto watch movies while I'm watching. But I had to watch it that many times to understand what's going on. It's a very confusing
job. They do a great job explaining things in the movie.
It's very confusing. But recently, here's the news: Michael Burry shorted a bunch of this. Shorted Tesla, which, if you're new to investing, short is basically you're betting against Tesla. This is big news. This scares people. Tesla already swings on the whims of madmen tweeting single words, Paul. I was explaining this to my wife, Beth, a totally normal person, what's going on with Tesla and crypto and the exchange that Tesla is buying Bitcoin, and literally Elon tweets one word and prices fall. I'm like, boy, that's not investing. That's just like pure craziness. So give me your thoughts. In this video, what we'd like to do is have your thoughts from two millionaires, Paul and Mo, giving your thoughts on what's going on moving forward with Michael Burry, why he shorted Tesla. I'm guessing you're not going to be doing this at home, but what does this mean for us as normal investors, Paul, dear friend?
Okay, so Michael Burry is the guy who got a lot of credit for betting against the housing market in 05 and 06. It is true that he was literally laughed at people. People laughed at him because of his bets on the housing market. In the movie The Big Short, he talks about how he would look, and this is probably over dramatized, but he would read the actual credit scores of the people in each one of these pools of assets. He's an extremely thorough investor. For those who don't know, he actually was buying GameStop around $4, $5, $6 a share. Now, obviously, he sold it way before its huge run-up. I don't know where he sold it at, but I'm quite sure he probably made 5 to 10 times his money on the investment, at least. Now, it ended up going to $400 a share, and now it's at $150 or so, whatever it is. He announced last year, or earlier this year, that he made a big bet against Tesla. He has $530 million in puts. So it's it's an indirect way of betting against the company instead of actually shorting it, because shorting it's actually quite expensive for a company like Tesla. But one thing I want to talk to you guys about, look at the stock price. I believe its intraday high is around $900 a share. So 900, and it's currently at I think it's 575 today because this is delayed one day. So I look at this saying, it's down over 33%. And for everybody out there who thinks it's to the moon, if it's always going to the moon, why is it down 34%? When that happens, people say, don't worry, it's a long-term play. When it's going up, it can't stop going up. So which one is it? Now, one thing I want everybody to understand here, we have this 8-pillar analysis. This software here, for 80 cents a day, you can have it. We do 8-pillar stock analysis. Tesla has 4 of 8 pillars as a check mark. As an example, when people say to me, well, it has all these pillars, should I buy it? This is CCL. You ready for CCL? 8 pillars? It only has 1 check mark, and I own CCL.
Me too.
So this is where I talk about people. When we sit there and talk about 8 pillars, it's not just about do we have check marks or not. It's about what is behind those check marks.
If you're new to the channel, Paul and I, Mo, we use these 8 pillars to look at the fundamentals of companies. All too often, you might be watching videos out there where you're getting price predictions that have really no basis at all. I wanted to start a trend on the show, Paul, where our new thing is we just predict our Bitcoin price, right, Mo? Because Kathy Wood just comes up with numbers. So what's your current Bitcoin target price?
Kathy Wood's is 500,000. Mine's 550. Paul's is
8.4 million.
8.4 million.
What a visionary you guys are. So we use these 8 pillars to look at the math behind these stock prices and see if they're overvalued or under, because guess what, folks? We want to buy low, not high. So here we go. Keep going, Paul.
So again, Tesla has more check marks to the pillars, but the pillars are telling you a story. The story that it's telling me here is what questions to ask next. This is a massively overpriced company. I have people here now saying, like, what do you think, $100 a share? No. I think $100 a share is way too much. I think the company's worth under $50 a share.
You've been saying this for like 3 years now.
Yes, correct. Now, people sit there and say, come on, Paul, that's not realistic. Okay, was it realistic to think at $900 a share that Tesla would fall to 550, 560?
But Paul, they're going to sell so many cars this year, 750,000, except if you actually try and buy one, which Mo did yesterday, Mo, and what did they tell you?
They told me, so let me start with my test drive story first. Paul and I were trying to go test drive a Model S on Saturday or Sunday. They said, we do not have any Model S's for you to test drive. We are not going to have one for you to test drive for 3 to 4 months.
Okay.
And then
I went to buy a car, and it was September or October delivery. And
that's assuming
that is now based on Tesla's history of their timelines.
Overpromising and under-delivering is
Correct.
what you mean.
So I am thinking to myself, it's going to be February or March of 2022.
At best.
That's just a guess.
So what I mean by overpromising is the Roadster's not here. The truck is nowhere near to be found. The Y is fine, and the Y very well might be one of the top-selling cars in America moving forward. But Elon loves overpromising and under-delivering. Go ahead, Paul.
So we look at a company like Tesla, guys. Tesla's market cap right now is about $550 billion. Now look at its revenue and profit in the last 12 months. $36 billion in revenue and $1 billion in profit. And you sit there and say, well, Paul, it's all about the growth. Okay, let me show you another company that we did recently. Alibaba. Alibaba is a $575 billion company, so a little bit higher than Tesla. Look at their income and profit. $110 billion in revenue and $23 billion in profit. Now, upside potential. By the time Tesla is able to justify that price and revenue and profits increase, you're going to say, well, the price has to go up then. So let's say it's a $1 trillion or $2 trillion company. Well, now it's a $1 trillion or $2 trillion company making $20 billion a year. So now you're paying 4, 5, 6 times more than you could get Alibaba for. That's all investing is what assumptions are you making? What are you paying for those assumptions? And on top of that, Tesla is diluting the hell out of their shareholders.
Paul, none of that matters. And you're so wrong because, they're not a car company, Paul. You're so missing the massive amount of revenue they're getting from their roofs, their batteries.
I believe,
the funny part is,
what percentage of the revenue comes from cars?
70% comes from cars.
Let me tell you guys a story. People out there who work out.
You don't get it, Paul. You don't get it. They're not a car company.
I don't get it. That's the point. But I will tell you this. If you look at the year 2000, and you look at 2006 and 7 with real estate, 2000 and stocks, you look at the Nifty 50 back in the 70s, nobody got it. You don't get it. This is different. It's the internet. Sounds good. How did that work out, guys? How did that work out? You're going to talk about Amazon. Amazon went from 107 down to $6 a share before it finally went up to 3,300. And you would have never stuck with it at $6 a share.
And the thing that everybody's counter argument would be is that Tesla is going to be that Amazon.
Great. Yes, you know what? Amazon was worth $2 billion back then, not $200 billion.
So, Paul, I have seen a reaction video recently, a very small channel that reacted to us and said, you're going to miss out on this amazing company.
Sure, I'm great. I'm fine with that. If I miss out on them, I'll find out. You know why?
Explain to people watching why they should be okay with missing out with a huge, quote-unquote, growth company like this.
If you invested in 2000 in all the potential big internet growth companies.
Pets.com, e-commerce.
If you invested $1,000 in the year 2000, that today would be $2,000 20 years later. For those of you who think that's good, that's about 3% a year.
This would include the Amazons of the world.
Yep. If you invested $1,000 in the S&P 500, back in 2000, it would be roughly, let me think here for a second, with dividends around $6,000.
Come on, that big of a difference? Just
something like that. Maybe it's 5,000. I can do the math, but it's a massive. It did about 6.6% a year for the last 20 years. So invest in all the hype. Invest in all the boring S&P 500 companies. Which one worked out? Why? Because you're overpaying for hype. You're overpaying for the future. And by the way, of this $1,000 gain, 80% of it, 800 of it, came from 3 names: Amazon, Microsoft, and Apple. And guess what? Amazon went down 95% in that time. And if you're telling me you would have been the person who bought Amazon at $6 a share, I need you to do me a favor. I need you to go to the bathroom. I need to take your wallet.
Oh boy.
You need to put it in the toilet. You need to flush the toilet. Get your wallet out of the way. Then I want you to go to the bathroom door. I want you to put your head between the bathroom door and the frame. Make sure it's a strong frame because this needs to happen. I need you to have your spouse take the door and slam it repeatedly into your head for being so stupid to think that it's actually going to be you that's going to pick Amazon at its low price.
You're going to miss out, Paul. Come on.
You would have missed out too because you were sold along the way.
Or if you bought pets.com, put it all in pets.com.
Yeah. And I love Tim revving me on every time I talk about the slamming the head in the door.
So what does it mean when Michael Burry shorts this? One of the most famous guys. He knows everything. He sees GameStop before it happens.
He just sees Michael Burry was down 20% on his housing short before he made 500% after fees. He has no problem. The statement that people made about him was, when you read the book, The Big Short, they said Michael Burry is amazing, but when he buys a stock, it goes down 50% before it goes up 1,000%. That's Michael Burry. He is so thorough. He is so smart. He's so good at this. When he's making a bet on Tesla, first off, we all thought Tesla was super expensive, but when he goes and does it, hey, how do you make the argument? Maybe he's wrong.
So
Maybe.
let me
but
get,
he's often early, not wrong.
So let me get your point here. So a guy who has foreseen some major moves, a housing market crash, who's also betting $500 million on this going down. He knows more than YouTubers sitting in their spare bedroom.
Isn't that shocking?
Who are investing maybe 20 grand at the most.
Guys, here's the point I make. How can all these people in the masses be right in investment? If you look at everything in history, buying low and buying the lowest price is the best time, and it's not when the masses do it. It goes to low points because all the masses got out of it. That's what makes for a good investment, is everybody else is out of it. What makes for a bad investment? Everybody's in it. If you have a hard time understanding this, stick with our channel and it'll make more sense as time goes on. If you just think I'm absolutely wrong and insane, then mark the thumbs down, dislike the video, and I'm fine with that.
Yeah, we'll never see you again. That's great.
Yeah, I'm okay with that.
Yeah, we want the badasses who want to be with us and follow us.
Maybe we'll see you in like 5 years when you lose all your money and you're like, yeah, I should probably have a process now.
And unfortunately, that's what it takes.
Mm-hmm.
It took me losing money on real estate and stocks early on to go, this didn't make any sense to me. I had no idea how I was going to make this work. Now, whatever piece of real estate I buy, whatever stock I buy, if I buy a basket of stocks, I know I'm going to be right in the long run of the basket. Piece of real estate, somebody asked me the other day, what are your returns on real estate? And I said to them, here are my returns. My worst performing property is 2 houses in Mexico that I had to pay cash for. For those who don't understand how important that is to know, when you pay cash for real estate, your returns are lower. Most people out there put a lot of debt on to make 15, 20%. Mo's a partner in it. Right now, we're on pace for 16.5% this year. It's my worst performing property in terms of total return. It's because I have to pay for it in cash. If I had debt on it, it would make over 100% return a year. Suck it, losers.
And that is our humble and respective take.
Listen, that isn't very humble. But I sit there and go, when people sit there and question, I go, listen, you're right. My job is to find the great deals. Our money is limited. Your money is limited. You spend 40 hours a week, 50 hours a week working hard, and then you go throw it in because some YouTuber says, man, this stock is banging. It's like, come on. Is that a process? There's one YouTuber out there who said you should sell puts, and he bought puts instead of selling them. Like, come on, people. Give me a break. This is insane.
But why, again, Paul, why should they trust you? I mean, what is
Don't trust me.
What is your credential?
Listen to my videos. Understand if I have a process or not. Understand if I have a process or not. Go look at some other idiots out there who talk about the future, and they're looking at 15-minute charts. Talking about the future, and they're talking about the good performance, and they're talking about the expected performance in the future, not even the current one. They're referring to the current performance. It's absolutely crazy out there. During great times, morons look smart. Everybody's a genius in a bull market. The right process will make you money in bad times or lose you less money, because that's what's important when it comes to investing, is managing the downside risk. Because if you have $100, and in the bad time, it goes to 50, it needs to now double for you to get back to normal, back to even. If you go from 100 to 80, it only needs to go up 25%. What's easier, 100% gain or 25% gain? You tell me. And it's been proven time and time again over 150 years. Value works in the long run. Value works in the long run. Value crushes in the long run. It doesn't even work. It beats in the long run. So in 2000, when internet stocks were the rave, if you'd bought our value picks back in 2000, you would have beaten the market by about 8% a year and gotten about 13%, 14% returns. Not only beaten the market, crushed the market. Not only beaten internet stocks, you would have beaten internet stocks by 10% per year. And over a 20-year period, that is the difference of double, triple your money, at least.
If you're tired of having your cryptocurrencies go up and down 40% in a couple hours, or having your stocks, your highly overpriced stocks like Tesla, the myriad of stocks we've talked about, if you're kind of fed up and tired of this, and you're tired of explaining maybe to your spouse why you're invested in these, you don't feel like you have a process, welcome to Everything Money
And
Paul
if your
Gabriel.
spouse hasn't left you yet because of how stupid you are in investing,
Oh boy, here we go.
then come listen to us and you can wow your spouse with your amazing brilliance of investing because you learn from 3 very good-looking men on YouTube. Swing.
We banging.
Well said. So tickle the thumbs up if you want to be on our team. Tickle the thumbs up, tickle the thumbs down, and argue with us below. And check out the Patreon, where we're building a community of people who think just like us and who are slaying it, and we're not buying that BS. So, all right, guys, that's it. Thanks for watching us. Everything Money, baby. Stay with us. Love you.